uh, so I have made this amount of money from trading this pair on the 2nd of May. It is a huge win for me. Basically, it fit my criteria, and you can see this is my entry when the trade was first being taken, and then when the trade has gone as planned. So it's a very good trade for me. So break it down first. Okay, so on the daily time frame, I can see that the price has created a new low. Up. You can see this a week. This zone is this area very difficult to trade. So when the trade breaks the low, the price breaks the low. This is the first data that suggests the direction is bearish. So to enter, we need some confirmation, some more data to support it. So we have this low over here, and then on the daily time frame, on the H4, I can see that even though that the price has broken the trend line and create a new bullish run, but to me it isn't a fully bullish direction yet, because the price has not broken this high over here. So we can see that the price has been rejected 2 times, and then on the second one it created a bearish move. So it's a bearish structure after all. So in order to enter the trade, we need a retracement, right? So we have the first data to show us that the overall structure of the market is bearish. So we need to find an entry for a shorting position. Okay, we have this low on the daily time frame, and then we can see that the price has been rejected 2 times, and then create a new resistance zone after it breaks the low over here. So this zone is very crucial. So that is 2, maybe 3 criteria. And then on the H1 time frame, I can see there's a reversal candlestick. This is my favorite pair to enter. So if I happen to miss the entry when the candlestick close, it's okay, because I know that the price will somehow likely to retest if we go to the lower time frame. Okay, so you can see there's a high and a low, so we can have this low act as a retest zone, or maybe a trend line over here. So we can enter when it retest. So that is my entry. Because this trade is very clear to me, so I know that the trade would go significantly based on my experience, which is why I hold this trade for like a day. Okay, this is a huge win for me. Let's go on to the next one. Took is the gold and the dollars. Oh, this one is magnificent. I hardly ever trade gold, but there is some exception. You know, when the structure is clear, when the movement is clear, there's no noise. So it fits my strategy. Okay, so there's the short position also as the long position for the gold. Okay, and I currently they all have shorted and earned this amount of money, and I'm currently on the bullish, still holding the bullish from yesterday. Okay, so let's back down. Okay, so first, on the 2nd of May, I have missed the bullish run. Oh man, it was very clear and good trade, but I didn't took it. I was hesitating. I should have hold my orders rather than close it first, because I was too afraid, too fear to hold the trade. Oh, you can see on M5 the trade doesn't go just confidently. It went rather slow, so that's why I closed it. And also I was holding some trade as well, so I don't want to make any more burden psychology. Okay, so for gold, when the price has created a new bullish run, price make a bullish run, okay, but overall the structure of the market is bearish. On a 4-hour time frame, I can see that there's the highs are getting lower. There are two highs. Okay, there's this first high and this high. So two highs are getting lower. Or just make it simple. The first bearish run and then the second bearish run. So the direction is bearish. Okay. So even though that this run is bullish, but the overall market is bearish. So which is why I am still looking for a short position. So we need to find an entry. So when I have this run, I take the Fibo and then I use it to measure the retracement. And in the morning, I can see that the price somehow reacting to the zone, the 618 level, and it also fit somehow with the lows, the previous low. Okay, you can see that there's a trend line, and after it breaks the trend line from the bearish, and when the retracement is bullish from the interest rate from the Fed, and when the price is reacting to this area, I can see that the stop loss is short. It's not that significant, so it's around under 100 pips, with maybe 40 to 50, 60 pips stop loss, so I can take it. So that's my risk. You can see that's my risk over here. So I will take the risk, and I took the short position. So I hold it for like half a day, more than 12 hours, I think. Yeah, 12 hours, half a day. And when it's reaching the level, this level over here, so I took the profit on the shorting position, because I know that this area is a strong support zone. and when the price is reaching this area, so I will take another risk to take a buy, because the buyers who have missed the first long position over here will take the place, will take the trade in here as well, or also with the late sellers. And so that's why I'm currently holding the gold trade as well. Okay, so let's go to the next one. It's for the dollars pair, the euro and the pound. Let's talk about the euro first. So I took a short position after the interest rate release. So if on the daily time frame, I can see that the lows they are getting lower, the highs they are getting lower. Okay, so it's a bearish direction. On H4, it's really difficult to find an entry because for my instant, it doesn't tell me where to enter before the interest rate news. So it's the FOMC meeting minutes, they are very powerful impact on the market. So before the release of the news, the price move very unpredictably. So that's why I didn't took any trade before the news. So this is when the news release. It happened to be in the early morning, in the very late for my local time. So a bullish run, and because the direction is bearish, so I still looking for an entry for the short position. So in the morning I will take the risk around here, because the major direction is bearish, and you can see that the price has been rejected 3 times, 1 2 3. So when the price reacting to this area over here, I will take the risk. It's a small risk, around 10 pips, and I enter around here in the morning. So when the euro, I remember the euro and the New York session begins, I enter another trade. So it's the New York section. So this is my first entry around here in the Asia section, and in the New York section we can see that the price retrace back, retest this low, this zone. So I enter again, and then I hold it for a few times. But when I see that the price reacting to this support, I close it on. Okay, it should be drop more, but when I see that it's reacting to the zone, I close all the trades on the euro and the dollars. Okay, so because I believe that it won't be a bearish direction anymore, because this is Friday, and I can see that the price, my view telling me that the price will likely somehow to make a breakout, because it's reacting a lot of time, 1 2 3 4 times. So I'm expecting that the price will reverse into a new bullish direction. So that is for the euro and the dollars. And the next one is the pound and the dollar. This one is very powerful as well. I took a lot of the pound and dollars. So just like the euro and the dollars, you can see that the lows they are getting low, the highs they are getting lower, so the direction is bearish. Okay, and before the interest rate news release, it is which happened around the last date of April. Price it has moved somehow clearer than the euro and the dollars. That's why I took the trade for the pound and the dollars. I took also the short position as well. First, I took the risk because let me remove this, because we have this zone over here. We have one low, price reacting to this area, price break the low, so this will make a zone where the trading opportunities happened. Okay, and when I go to the lower time frame, I believe that the price will somehow to sweep out the stop loss, the late buyers, because they think that the price will be bullish, but overall the structure and the direction is bearish. So I need to looking for an entry. I need to find when the price break this low. And I took the trade around here because I think that at that time I think that this is the highest high, and this high is just a stop hunt. So I took the trade because the risk is quite small, 20 pips. Okay, and I am predicting a head and shoulder pattern. Which it did, by the way, it did become a head and shoulder pattern, and I earned a significant of money, and I close it on the area over here because I can see there are a lot of wicks reacting, and there's also engulfing bullish candles. So I close all of my short order first in here, and also I need to wait for the release of the interest rate new to protect the capital, which is very good. So just like with the euro, and when after the news release, you can see that the price make a small bullish run, and it retraces back to the first place when the price made the bearish run. So it will catch a lot of attention from the sellers that had not been able to enter the trade in here. So the trade, it went around 50 pips, and when I see that it's reacting to this area, I close it on. The same thing with the other USD pairs. I think that the price will make a new bullish run, not a bearish direction anymore, because somehow the market telling me so. So that's it. Guys. I hope my breakdown is useful for all of you. Be sure to subscribe and check out my further videos.